Everyone, welcome. Thank you for joining us again, another meeting of DNewTech. I think everyone's familiar with the format. We will have our keynote speaker who'll speak for 15-20 minutes, 5 minutes of Q&A. This evening we have 4 entrepreneurs who will speak. They'll each get 5 minutes, and my very alarm clock will go off, so you need to stop when it goes off. They'll have 5 minutes of Q&A, and then we'll stop again and switch to the next person. So before we get started, I want to thank all the sponsors that make our evening possible. Schedule for reminding you, rescheduling you, and filling cancellations. Atomic Object, designing and building world-class software products. The Mid-Michigan Innovation Center, Collaborate, Educate, and Succeed. Star Garden, out in Grand Rapids, helping people start to get started. Wisdom Family Companies, and Quicken Loans. Most especially want to thank our host this evening, Grand Circus, and Katie showed us. So Katie, why don't you come on over, tell us a little bit about what it is that you guys do, how long you've been here, and how long you've been with the business.
Thank you so much.
Sure.
I especially appreciate that the entrepreneurs have a 5-minute timer on them. I know how entrepreneurs like to talk. And I'll include myself in that category, so I'll try and keep this brief. So Grand Circus, this lovely building that you are all sitting in, has actually only been around for less than 2 months. We are very much a startup ourselves. And where this came from was this vast need in Detroit for programmers, for tech people. There are 1,100 job openings in Detroit on any given day for people who can program. That's astounding, especially given the unemployment rate here. So we were founded to try and bridge that gap because there's so much going on with the tech startup scene, right? You have Detroit Venture Partners next door, you have Accelerate Michigan going on in 2 weeks, you have Invest Detroit, you have Level of Ventures. There's a number of financial sources going in, and all these entrepreneurs with great ideas, and then no tech people around to make these ideas products. So that is the gap we were trying to fill. Another gap we're trying to fill here is, in the words of one of my cynical friends who works in the tech industry, she said, there are so few programmers in Detroit that people who can write just like a little bit of HTML think that they're the best things since '96. We could be better. I'm sure that applies to no one in this room, but I'm sure also that every programmer, every coder, every tech person can learn a little more. So we're not just teaching the basics, we're also trying to take you who are at the mid-level and make you advanced. So if any of you are stoked to learn a really exciting advanced skill, or your company wants to send you to come learn one, send an email our way and we'll try and make that class happen specifically. But it's not just classes, right? It's also support for the entrepreneurs. Where do they get their work done outside of the 1515 Broadway or another coffee shop in the area? It's hard to get things done when you're overhearing people like me on their cell phones talking to their friends back in Seattle. So that's why we have a co-working space downstairs. It's beautiful floor-to-ceiling windows. It's a great community vibe. Today we celebrated. Thane is in the room. Thane launched his company last night. If we could just do like a round of applause. It's our first coworker launch, and I'm proud to say, along the way, Thane hired one of our other coworkers to do videography. He's been working with another company called Angelsbr for some advice on co-working and launching his company, etc. So we do try to get a community space. And of course, the number one thing we are is a community center. So we welcome in events like this. There are so many people in this room. This is so exciting, and this really speaks to the energy that's building in Detroit. And it's not going to keep building unless we give you guys a place to have these events, unless we encourage you to come back for more and keep learning and keep growing. And that's what Grand Circus is all about. So we've got some flyers out here. Maybe I'll just pass them around the room. Please come back for more events. And because you are such a special crowd to us, we actually have a great offer to make you. Who here has heard of Startup Weekend? Startup Weekend is this really cool weekend where you start a company in a weekend. You get here on Friday, everybody pitches their ideas. They form little groups of 2 to 10 around the best ideas, and then they have until Sunday afternoon to figure it out, make a minimum viable product, and pitch it. The winner this year gets a month of co-working space in Grand Circus, as well as a bunch of other really cool stuff. And if you sign up for our Ruby programming class this weekend, if any of you are unfamiliar with Ruby, we'll throw in a free Startup Weekend registration. So it's a pretty good deal because that's $125. And it's a great deal because our Ruby programming class is a cool language that's useful to learn. So please come back for more. Welcome to Grand Circus, and have a great night.
We have time for a couple of questions. Are there any questions? questions that people want to ask to learn more before Kate goes out? Yes.
Two quick, one question. How much does it cost to say rent a desk or rent a cube in Grand Circus?
That's a great question. So right now our desks start at $400 a month, but we're trying to figure out an option of maybe doing $100 a month to have a non-dedicated desk on our third floor. We're also willing to work with entrepreneurs if you can truly prove you have a need. So send us an email and we'll work something out on that. But it comes with Wi-Fi, printer, scanner, a really cool conference space that people actually want to meet you at, as opposed to being like, oh my gosh, we have to go to a coffee shop again, as well as a wealth of opportunities to collaborate with other coworkers in the space who are really cool.
And then also, who is behind, how did Grand Circus going to be with the BBGC involved? Who are the people that come in and work?
So we're funded in part by Detroit Venture Partners, also Invest Detroit. So we're backed by Angelsbr is what we like to say. But this was a bunch of people in the Detroit area coming together and saying, this is a true need that the community has and trying to make it happen.
We offer to like businesses to outside of Detroit. So if my company works in Northville, Michigan, could we come down and have some space here that we could rent out for some of the employees at that office if they want to work in Detroit?
Yeah, actually we have a couple of companies in our space, notably two Global and Tumblr, but that's under wraps because Melissa Mayer can't find out. But if there is an outposting of a small group of people who want to work in our space, we can make that happen. We do try to keep it really focused on entrepreneurs, but we're open to other people being there if they're willing to add to that collaborative community and have something to give. We also have a pay-per-visit system if you're not going to be here the whole month, just a couple times a month for a visit.
Yeah, Ruby class, so Ruby class is teaching.
This weekend.
Who's actually your student? Is that a beginner class? Is it?
The Ruby class, correct me if I'm wrong, is a 101, isn't it? It's a beginner Ruby class.
The Ruby class?
Yeah.
Yeah, it's for existing developers that want to learn Ruby. Okay, it's not by Steve Schwartz. Yeah, I don't know if Steve's here. But Steve's often, part of DNewTech, based on another very good program.
So it's some existing programming experience, but new to Ruby.
Now, the other question I have is, what level of people are you taking in to train? I know that we had a couple of entrepreneurs that pitched at our sessions, said, we can take X automotive assembly plant workers, and a weekend get them started in training. Is that the level you're talking about, or are you talking about people that have a bit more background and experience in the program? So who is your ideal type of person to come in to learn from your operation?
That's a great question too. So as I said, we're a startup, right? So you getting involved in Grand Circus and emailing us what you want can be part of shaping Grand Circus for the future. A lot of our classes this semester have been very much beginner classes. Our Build a Dynamic Website class, which again you can ask Faye about if you have questions, took people from the most basic HTML, I know nothing, and by the end of 10 weeks they will know how to develop a website. However, we would like to move into more advanced courses after this semester, and we're also willing to do it on a company-to-company basis. So if your company wants to train 5 workers in a specific skill, that's something that we can work on as well. So we're actually designing next semester's courses right now, or scheduling them. So if you have input, if there's stuff you want to learn, let us know. We'll try to make it happen.
Any other questions?
And also, I should mention, the classes aren't just on tech. We also have classes with, like, this weekend we have one on print to digital design. So if you're a painter, if you're an artist, how to turn that skill into graphic design. We also have classes on entrepreneurship. We had a really good one on sales. We have one coming up on the things they don't teach you about a startup, including accounting, finances, and other boring stuff. And for how to write a business plan is coming up, etc. So if you're in the tech or entrepreneurship or art or really small business or almost anything, we probably have something to hopefully teach you.
Okay.
I should mention on the Startup Weekend offer, if you do sign up for the Ruby programming class, shoot me an email and tell me that you were here and got that offer, and then I will make sure you get the free registration for that.
And your email address is?
Kate@grandcircus.co, or right here, hello@grandcircus.co. They gave me the hello email because I'm friendly. So shoot me an email about anything, and come back soon.
Great, thank you, appreciate it.
Thank you guys.
Great. Excellent. With that, I'd like to introduce our keynote speaker for this evening, Mark Cooper. Mark has a background in public accounting. He started with Ernst & Young. He's now a founder of Andrews, Cooper, and Public. They have offices in Pocono, Cedar Rapids, Saginaw, Bay City, Midlands, and Auburn Hills. He has leadership service background as president of the Capital City Community Foundation, 2 Lansing area Rotary clubs, MSU College of Business Alumni Board, and 2 MSU Departmental Advisory Boards. A note for our presentation tonight, he's a founding member of Capital Community Angels, and deeply involved in investment screening, due diligence, membership development, and community outreach. So Mark, go ahead and take it away.
Thank you. I'm very pleased to be here with you tonight. Capital Community Angels is very much a startup in our own right. And I'd like to tell you about our story. As was just said, a little bit about my background. I think I was destined to participate in the angel market because my training in that was public accounting. CPAs are trained to be skeptical at everything that we look at, and that's kind of a natural element to be involved in this kind of field. I spent 17 years with Ernst & Young as partner there in the Lansing office, and then in 1993 I had the opportunity to join with other partners and acquire their private company practices in Lansing and Saginaw, and that's how our firm got started. Spent 20 years doing that. Since 1999 I've been on the board of directors of the Auto Owners Insurance Group, which is a Fortune 500 mutual insurance company here based in Michigan. In 2007, the Capital Community Angels was formed, and to be honest, I think the initial thrust of that group was in part philanthropic. We looked at the business environment in the central Michigan area and said it needs something to assist in the startup world. Perhaps we can play a role of providing startup capital for that community. As time evolved, I think we became more and more convinced that if we operated as a traditional angel group and provided those types of services, feedback, participation, that would be the most valuable thing that we could do in providing that insight and feedback and grading with respect to the opportunities as to our belief as to its likelihood of success. So we formed in 2007. Our geographic focus is 90 miles from Lansing. It's really designed to say if we're going to participate with the company and observe them and be associated with them on a frequent basis, we want to be able to drive there and participate in board meetings, committee meetings, annual meetings, and those types of things. We operate on what we call a shared effort model. When we think of angels, we think of here's the individual angel that is the lone wolf angel making that investment decision, the evaluation, the due diligence all on their own. Or the alternative, we think of an angel fund where there might be a pooling of the financial resources into the fund and it's more professionally managed, and a small group is doing the investigation, the attraction of the investment opportunity, the evaluation of the opportunity, and the administrative work associated with it. In our model, individuals pay a basic membership dues for carrying on our basic needs of meeting space, administrative duties, and those types of tasks. But beyond that, all of the efforts are volunteer-driven. So the efforts of recruiting potential investment opportunities, recruiting members, doing due diligence on a particular deal, all of that is shared by our individual members. We equate it to like a Rotary Club example. Like most angels, virtually every one of our members has had entrepreneurial experience in their background, and that's what's caused them to have an interest in this field as part of their investment portfolio, but also as part of their giving back. As a startup, we have focus on saying from an enterprise, the entity needs to have at least 100 grand of capital investment needs for us to want to pursue it. It just doesn't make sense that needs below that. That's really the friends and family around, and we don't want to try to get into that level of setting. I think the statistics show that a typical angel round nationwide still averages for an angel group investment somewhere in the $250,000 to $300,000 area, with a total round maybe being $1 million to $1.5 million for an initial first round. our experience has been our group has provided up to the 300,000 or so area as in our investment, and then we've syndicated or participated with other angel groups if the round or raise is needed to be much higher than that. Obviously, it's a high-risk area. So to participate in this area, we're looking for companies that have high revenue growth potential. Many of the deals that we looked at have been pre-revenue. So from our process standpoint, one of the first things we do is screen for the opportunity to make a pitch. We want to normally try to make sure that we're looking at all enterprises consistently, so we asked the group to prepare a 2-page application form, complete that. That allows us to assess it for the various factors that we typically look at. We often then supplement that with a phone screen and call to references on other people that might have had exposure to the entity. First step is look for the uniqueness of the offering. What's the product like? What's the service or system being proposed? We ask the basic question of how compelling would the benefits that they have that be offering to their targeted customers. We look at the factors of sustainability. What is the strategy for establishing and maintaining a competitive advantage? Do they have the ability through patent protections or secrets, company secrets or processes to be able to protect this? We also look for the opportunities if the product or service is targeted initially at an initial market. Does that same setting have application to other areas? Often, and we've seen this right off the bat, where some of our companies have started off with their ideas and their market focus and focuses on a particular product area, and as they've launched, they've discovered that there's roadblocks, increased costs, and things like that that might not allow that to be as attractive as they initially thought. So they'll spin to another area where it has the same abilities from a competitive advantage and utility to be able to spin to that area and then pursue that route from a development and launch perspective. We also look at that really from an assessment of the long-term potential of the enterprise and its market potential. Associated with spin, we want to know what they've done to really understand the market in the very first place, and what do we think their ability is going to be to attract and address that market. We look at the strategies as being very, very critical. Try to assess those strategies as to how effective they're likely to be, whether or not they've done the homework and due diligence on trying to select that strategy, and how they plan to implement it. We look at competition. What is the current competition? One of the classic things is when they say, well, I really don't have competition because this is unique. We discount that immediately because we always know there's competition. One of the competitions is doing nothing, continuing on with the way it is. But we know really how they assess the competition and the cost of looking at maintaining that competitive position and the cost of attracting marketplaces. Very important is the scaling up process. Do they understand what it's going to take to go from pre-revenue, launch, customer development, product development, in all the aspects of creating that business? Part of this process is looking at the cost of product development, but also the cost of infrastructure needs and what likely financing needs might be needed down the road. Patty is a person in the room, I'm going to point her out, that we've had frequent conversations with along the way in just saying as this entity grows, what does a typical venture capital firm look like if additional financing is needed to really advance this company? And what kind of requirements might they have in terms of looking at the consistency of the business, the clarity of the business, the administrative structure? How does this company operate in a way to avoid the warts and problems that may preclude them to be able to attract end financing? I put leadership on the last slide, but really the team strength. I think we've really gravitated towards trying to go as in-depth into looking at the key strengths of the people that are involved in the enterprise. How well do they know the product, understand the industry, what are their personal strengths and attributes, will they have the ability to stand behind it, how committed are they to the enterprise, is this something that, since many of us grew up as entrepreneurs, do they live, breathe, and think about the success, and how is this ingrained in their blood of wanting this business opportunity to be successful? As investors, we look at it and say, from our perspective, we're highly interested in the success of the business, but we're never going to be more interested than the entrepreneur themselves. So that's kind of the benchmark question that we have tried to ask. We hope that the entrepreneur has a very positive attitude and sense of commitment that it is going to be worthwhile to put the effort behind this enterprise and to launch it and to expend their personal capital of time and resources and the commitments that they make to their team members and to their families about wanting this business to be successful. But we also hope that it's realistic. I told you right at the beginning that I'm a CPA, so my natural reaction is to be a skeptic. And so people that interact with us will hopefully benefit from the tests and the questions that we'll ask, and really helping them feel confident after going through the process that they thought of the things that are going to be major influences on their success curve. So we want to have asked all questions, but we also want to know that the enterprise itself has a sense of realism. Our approach is, unlike tonight where you got 5 minutes, our approach is to allow you 15. And then after the 15 minutes, to spend 15 minutes in the question and answer time period. The reality is sometimes we go beyond that, but our real objective is to, at the end of that time frame, to say, no, we really don't have an interest. That, I think, is a benefit to all to say if there's something that truly doesn't match, or if we see problems, that you get that information communicated to you very, very early on in the process. Often, however, we say we really like you, we really like the business and the opportunity, but from a staging standpoint, you aren't far enough along in the development curve on all the aspects of it, whether or not it's the assembly of the team, whether it's the development of the product idea, whether it's selection of the marketing process, or any of the things in arranging your structure of allowing this to move forward. If it's a success in our process, we will have conducted that 15-minute exchange of questions and answers, and then from our work model, we excuse the entrepreneurial team, and then we talk about it as a group. We do our own evaluation, we do our own assessment, and at the end of the day, we do it around the table. Are you interested? As I described in the initial slide, as a volunteer-driven organization, the key filter is if there's people that are willing to participate in the due diligence process, that means we're interested and we'll move forward with that investment. So we're saying to the entrepreneur at that time, we have a very strong interest. We're willing to contribute personal time to this investment opportunity. Our focus on, from an investment opportunity is first, we concentrate on the technical aspects of what we're proposing. So we'll do an assessment of what do we think the software might do or the product might do. We have the benefit of being old people. And being old, we've been able to accumulate lots of contacts throughout that time period. So we use the benefit of those relationships to help us do an assessment of this, and through those assessments really get to an understanding of is the technical performance going to be what it should be, and have we asked the right questions. After we've done the technical analysis, then we tend to dive into the other areas of the marketing plans, the financing plans, the assessment of the team, and the leadership requirements, looking at the various marketing opportunities that might be present, whether or not there's other angel groups that we might need to associate with and bring them on the deal and get their assessment at the same time that we're doing it, so that if the need is beyond our fundraising setting, that we will be convinced that there might be the ability to raise the overall funds to properly launch this enterprise. And once that's done, then we'll go to the legal due diligence and term sheet negotiations. I was asked the question earlier tonight, what industry focus do we have? Well, as an angel group, I think angels tend to be more broad in their focus than the venture group, where the venture really has more often a more industry focus and skill set. Our current portfolio, the investments that we've made, indicated kind of a broad suite. The very first one that we did was a material company, a material supply company, which develops carbon graphenes using nanotechnology. Very, very high risk, high opportunity, but high potential return if this entity is successful. Another one was Boral Farm. Boral Farm uses boron-based chemical building blocks as catalysts to assist the pharmaceutical industries and other chemical processors in being more effective in the way that their plant operations operate, including from the research all the way to the production settings. Accio is a wind power company where they're developing an alternative way to generate using wind as a setting, to using no moving parts to generate increased energy sources. By way of example, and illustrating the 90-mile setting, XG Sciences is a Lansing area company. Boral Farm has their headquarters down in Ann Arbor. Accio has their headquarters in Ann Arbor. Vesteron is developing spider venom insecticides, spider-based venom insecticides targeted towards the agricultural, nut, and fruit marketplaces. Their headquarters are in the Kalamazoo, Southwest Michigan area. RU Human is a software company just right down the street. Many of you probably are familiar with that one. Biophotonics Solutions uses tools to enhance the performance of femto-based lasers. That's a Lansing area company. And then Avagant is a head-mounted display company based out of the southeast area of Michigan. We're working on a term sheet to close our next investment that should close in January, and that one is going to be in the medical space. So you can see, just based on each one of these, that it's fairly broad in terms of the industry focus. From a personal standpoint, I've enjoyed this, just taking the 37 years of professional career experience and the knowledge base generated during that time period, and being able to apply it to the angel investment setting and help the entrepreneurial companies really get an assessment on their companies as they presented them, but also to be able to sit around the room and interact with the other angel investors and participate in the process, where I'm fortunate that many of the other members in our group have doctorate degrees in clean water efforts, experience in software and tech firms, and experience in the medical field, and experience with engineering and other topics. So we have some very bright people in the room, and for me it's been kind of generative again of just learning. It's caused me to subscribe to science magazines and things like that, and go back to school to learn more about the terms that are sometimes used. If you want to know more about us as a group, you can go to our website. It's ccangels.org, or Google Capital Community Angels, and thus far we're the only people that I know that are using that name here in Michigan. Hopefully that will give you some background about how where we stand as a fledgling angel group getting started. We had the experience of 2007 of really hitting the ground fast. Having the 2008 recession kind of caused us to all take a look and saying what's going on, and the deal flow really slowed down at that time, and we really effectively relaunched in the end of 2010 and primarily in 2011 and since. Any questions?
Well, first of all, thank you very much for putting that. So we have a question over here?
Yes.
Just wondered if you would share what's the total investments as a group you've made thus far in all those companies, and the typical deal that you do. Is it convertible debt? Is it equity investments? And if it's equity, what kind of range of valuation do you look at?
So the range, first, in terms of total dollars, I don't know it off the top. It's about $1.5 million. You know, if we looked at it from average deal from our group in the 200 to 300 range and 6 or 7 deals, somewhere in that category. First couple, based on the stage of the companies and from the type of investments, it's primarily been two types. First type being a convertible debt. Second type being a preferred, convertible preferred. And really the driver on both of those has been the stage of the company. So it's been a very early stage. It's very difficult to derive value. It looked like the time in which another Series A financing might occur is close. We've tended to go to the convertible debt route and going at a discount of that conversion rate. Then again, depending on the nature of the company, there might be a cap where we say in order to be compensated for the stage of the company, that the conversion rate won't occur above this type of cap. You know, part of the thing we look at is saying we don't want to have terms that are so difficult that it makes it difficult for that next financing round to actually occur. That's part of the investment strategy. We also look at is a couple of principles of unity of leadership. Is there clear leadership within the company so that we know unity of command is present within the company, and also the common interest that might exist with the investment community. Is it likely that all the participants in this investment are going to have the same mindset and desire as to the growth path of the company, the financing needs to support that, and the exit strategy that might be present? What was your second part of your question?
Yeah, I was just, the other part was if you do an equity, what kind of valuation range you're finding in the early stage?
It's going to be what you read in the marketplace averages. And then if you read in the marketplace on the averages, those have tended to be for angel values, $1.5 million to $2.5 million. Part of that is just the basic driver on looking at the timing and when the exit strategy might occur, what likely dilution might occur prior to that time, and the possible multiple, and the realization that the exits, when you get upon a sale of the company that's above a $20 million price, that's it gets tougher. So the likely efforts and to get the multiples and the return ratios that we know we need to have in order to make this reasonable, it's got to start in those kind of levels. On an overall basis, to answer your other question you didn't ask, we seek, when we look at an individual investment, we ask ourselves, is it likely that this individual investment can produce a 35% internal rate of return? If it can, then we'll pursue it. Because we know that the likelihood of all our investments being a success is not likely. Although every one of the investments that we've made to date is still alive.
What is your response and/or the reaction of your angel network to the lift
any funding, or if there any funding using general solicitation?
Well, many of our members in our group will not get involved in any type of setting where their social security number has to be provided. So the thought of saying we're going to turn over a tax return as an example of proof of net worth and angel capacity, it just says we aren't going to participate in those markets. So from our perspective, we're looking at it fairly conservatively and saying that we're going to seek opportunities that fall, we believe, under the restriction where they haven't done any general solicitation yet. They will fall under the old regulations, which means we can just attest that we are qualified investors.
Great. Think of business. Great, Mark. Thank you very much. Mark, will you be able to hang around for our 4 speakers so people can ask you some questions? Okay, good. Okay. Scott Phillips will be our first entrepreneur out. While he's getting his computer set up, Scott grew up with a pole vaulting pit in his backyard. Most of his neighbors had basketball courts, volleyball nets, and swing sets. Not Scott and his brothers. They were always pole vaulting over people, cars, houses. They had fun. They had fun. Scott, kind of similar to Mark, spent most of his time in corporate America, including 15 years of Whirlpool. He told me while he was sitting in client meetings over the last year, doing innovation consulting with tiny, fast-moving companies like ExxonMobil, he said, you know, I'm missing something here. Decided he wanted to work with true startups and entrepreneurs instead. So he is here with us, and Scott, take it away. 5 minutes.
Thank you. Thank you, Jeff. So my name is Scott Phillips, and I'm founder of TheSearchLite, and I have a couple of my colleagues with me here, Rmrayle and Mark Johnson. And I'm happy to be here tonight. So when I decided to do a startup, I kept seeing this infographic that you're seeing on the screen here, and I'm sure you've seen something like it or some information like it about the success rate of startups. And I don't know if the numbers are exact, but something to the effect that 10% of all new products started up succeed, the rest fail. And as far as the entrepreneur themselves, 18% of first-time entrepreneurs succeed. I've heard numbers ranging from 10 to 18. So I saw this the first question. I said, well, what am I doing? Why am I getting into this business? But really what I asked was, why is this happening? Why is the success rate of startups so poor? And so I think we've all read the information. Sometimes it's the technology. Sometimes it could be the team, like Mark was speaking about. Sometimes it can be early stage funding. But a lot of what I was reading was it had to do with the market, understanding of their customer, and what I would call customer discovery, kind of using lean startup language. And so that's what I started doing was my own customer discovery about what was going on with other startups doing their customer discovery. So the TheSearchLite is an online, challenge-based customer discovery engine that provides startups with potential customer segments that they should be talking to. It's a front-end tool to the lean startup and customer discovery process. If you've read about that or are familiar with kind of that movement, Steve Blank and Lean Startup. This is a graphic that I stole shamelessly out of Steve Blank's information. So his concept is that a lean startup goes through 4 phases: customer discovery, customer development, customer creation, and then business formation. And that you don't really worry about those later stages until you really deeply understand the problems you're trying to solve and the solution you have, you validate that it solves those problems. So the TheSearchLite participates in the very front end of the lean startup process. So the first stage is customer discovery, and there's 4 phases to that. The first phase is called hypothesis development. And this gets into what's called the business model canvas, where you make a bunch of guesses or hypotheses about how your business model is going to work. And one of the important things you're doing very early on is hypothesizing about who your customer segment is, who has issues that your technology or your solution can solve. And that's where we play. We play right there to try to provide better information when you get started on your customer validation. Again, this is the business model canvas that you'll see used at a lot of business accelerators or university tech transfer programs, invented by Alex Osterwalder, becoming more ingrained, and it kind of fits like a glove with the lean startup process. So the process teaches you how to do it, and the business model canvas is kind of your scorecard as you're going through, making hypotheses about how your startup is going to work. And one of the early segments, there's 9 boxes in it, and one of the early, the most important ones early on is that customer segment and your value proposition, and making sure that you have found what's called a product market fit or a problem solution fit. That you really have something that's going to solve problems and you know who those customers are that you're going to solve them for. So again, the TheSearchLite is an accelerator, an engine tool that you can use to kind of discover some, we call it application-rich domain areas that you should be investigating first as you're kind of looking for who your beachhead market is. It's software as a service. It runs as a 1-week challenge. So essentially what happens is an inventor or an entrepreneur posts their value proposition or their solution. We kind of simplify it, decompose it a little bit. We've got a process that goes through 4 phases over the course of a 1-week challenge. We engage a user community that involves the inventor themselves, innovators creating customer profiles, investors who are kind of giving, you might think, a Shark Tank type feedback, and then the wisdom of the crowd, influencers who are getting on and looking at them and voting and so forth. And so that's kind of the way the tool works. In the end, the final output is what we call a value proposition canvas. So again, what we've done is taken sometimes what is a very scientific solution, broken it down very simply into what it can do, what it can gains and creates, and then we challenge the crowd to come up with customer segment profiles that have a nice product fit. And it's kind of a fun game the way you engage, so you find out, is that problem a shark bite, a dog bite, or a mosquito bite? And we ask the crowd to kind of say how big a problem is it, and then we want to find out if that's a good fit for this value proposition, a poor fit, or somewhere in between. So really trying to understand from the wisdom of the crowds, are you solving a shark bite, and do you have a good fit with your technology or value proposition? And so that's it. Where we're at is we're doing our own customer discovery. We're starting to go to some industry shows. We're launching our first proof of concept with some professors up at Michigan State, Spartan Innovations. And we're thinking about what the next gen of software platform is, and we need software development help badly. That's it. Any questions?
Questions?
How do you think this fit in with other tools like DNewTech, where you can organize your canvas? And is this like a complementary thing, or do you see that?
Yeah, there's a lot of Canvas tools out there, Lean Launchpad and Lean Launch Lab, and also has strategizers. So there are people using a lot of canvases to track their hypothesis and their testing. I'm not a Canvas tool at all. I'm really a knowledge research engine. So we're certainly complementary, but what we're going to do is feed you ideas about what those hypotheses should be that you're entering into the Canvas tools.
You've, well, go ahead.
Sorry, I have what we just heard about, one part of the talk was addressable market. Have you considered that already? What your addressable market?
Yeah, my own market. Yeah, so far, so we've done 40 customer discovery interviews, and we're going to do 100, which is kind of the benchmark. And we've pivoted several times. We started out looking at second stage growth companies. We thought that they and their investors would be looking for adjacent markets, and turns out that's not the case. They're focused on their primary business. We talked to VCs and angel investors about their portfolios and help they needed to have their portfolio companies grow. We pivoted away from that. Then we talked to startups themselves, and they really liked us, but they have no money. So then we started talking to accelerators, public and private accelerators like Spark and the Smart Zones and Y Combinator and private. They do like this. The beachhead market right now seems to be university projects and university tech transfer offices. So they have a lot of, U of M as an example does $1.4 billion of research. They have 420 disclosures a year, and they have a staff that's trying to figure out which of those they should move forward into commercialization. So right now, our 2 biggest opportunities are business accelerators and university tech transfer offices.
We should talk after our market is also higher ed.
Okay, great.